The Financial Facts of Life, Part 3. Materials provided by Genesis Financial Management. Bankruptcy. What leads to it? Crushing medical expenses, disability, unexpected job loss, overwhelming personal problem, business troubles. Sometimes it's your only remaining alternative. Don't file for bankruptcy for small amounts. It's always better to work through your money problems and to pay your debt back than to declare bankruptcy. Put your debt into perspective. While $20,000 is a lot of money, you can probably pay it back over time given a little help from a credit counselor and your creditors. The bankruptcy system has changed. More than 125,000 individuals and families declare bankruptcy each month. The number of bankruptcies in the U.S. did not reach 1 million until 1996. However, in less than 10 years, that number doubled. The soaring number of bankruptcies has led to changes in the system. Public Law 109-8, called the Bankruptcy Abuse Prevention and Consumer Act of 2005, became effective October 17, 2005. The law brought with its most sweeping changes to bankruptcy in the last 30 years. Congress passed this law to ensure that bankruptcy was the option of last resort to prevent abuse of the bankruptcy process. There are 4 types of bankruptcy. Chapter 7. It's also called the liquidation bankruptcy. Assets that are not exempt are collected and liquidated, and the proceeds are distributed to creditors. All eligible debts are discharged. Chapter 11. Reorganization bankruptcy, primarily used by businesses, but it can also be used by individuals. The business or individual creates an organization plan to repay all or part of the debt owed. Normally, the business continues in operation. Chapter 12. It's a reorganization bankruptcy for family farmers. This allows farmers to reorganize their business affairs, repay all or part of their debt, and to continue operation. Chapter 13. This is also called the wage earner reorganization. This is primarily used for individuals to reorganize and repay their back within 3 to 5 years. Chapter 7 and Chapter 13 are the 2 most common types of bankruptcy filed by consumers. The new bankruptcy process is now more complicated. Individuals with income above the median level in their state need to make substantial lifestyle adjustments to obtain bankruptcy relief. The new law requires individuals to participate in credit counseling and to complete an education program. Someone who filed for bankruptcy before the new law went into effect will have a vastly different experience than someone who files for bankruptcy after 2005. The new bankruptcy process. Step 1. Call a bankruptcy attorney. Your attorney may ask you to bring the following to your appointment: a list of your secured and unsecured debt, proof of your household income, a list of all your assets and their value, your tax return from the previous year, a list of your current living expenses. Step 2. Means testing. When you meet with your attorney, he or she will conduct a means test to analyze and determine what kind of bankruptcy you may have to file. Your attorney will review your total household income for the 6 months prior to filing and will compare this to the average income in your state. If your income is below the average in your state, you may be able to file for Chapter 7. Your attorney then reviews your assets, debts, and living expenses and explains which assets are and are not exempt in bankruptcy. Assets that are exempted are based on the state and federal laws. If your income is above average in your state, you need to undergo another round of testing and may or may not be able to declare a Chapter 7 bankruptcy. Step 3. Credit counseling. Before filing for bankruptcy, you must contact a U.S. trustee-approved nonprofit counseling agency for counseling and budget analysis. The counseling is designed to make sure that you understand all the options available to you and must take place within 180 days prior to filing. The counseling may be offered in person, in a classroom, over the phone, or online. The cost of the session should be reasonable and should address possible alternatives to help you resolve your financial problems and include a discussion of the factors that cause your current financial situation. You'll receive a certificate upon completing the counseling that you must give to your attorney. Step 4. The filing. Once you've completed the counseling, you can file the type of bankruptcy you are eligible to file. Your bankruptcy is filed with the bankruptcy court. Step 5. Financial education. Whether you file a Chapter 7, Chapter 13 bankruptcy, you will be required to complete a U.S. trustee-approved personal financial management program. The cost of the course may vary, but it must be reasonable. You will be able to enroll in a program offered in a classroom in your area over the phone or participate in an online program. Once you complete the program, you will receive a certificate that you must give to your attorney to include in your file. Step 6. Meeting of the creditors. Within 45 days of filing, you will have a meeting of the creditors where you will testify under oath. Your creditors have the right to request a copy of your tax return. Step 7. Discharge. If you're filing for Chapter 7 bankruptcy, your eligible debts are normally discharged within 60 days after your meeting of the creditors. If you're filing Chapter 13 and your reorganization plan is approved, your repayment process will begin. The court sends a notice to your creditors to stop action against you. Though there are exceptions to this, your attorney can explain. The law discourages repeat filing. Under the new law, you cannot file bankruptcy if you have not filed for federal taxes. You cannot file for Chapter 7 or Chapter 11 bankruptcy for 8 years from the previous bankruptcy. You cannot file for Chapter 13 bankruptcy for 4 years from the previous Chapter 7, 11, or 12 bankruptcies, or 2 years from the previous 13 bankruptcy. Not all debts are discharged. Certain debts are not dischargeable in bankruptcy, including child support, student loans, certain debts incurred 70 days prior to filing, court restitution, federal, state, and local taxes. Debts you can discharge in bankruptcy. Credit and charge debts over 90 days old. Collections. Court judgments. Medical bills. Old utility bills. Other bills not secured by collateral. The consequences of filing bankruptcy. Filing bankruptcy is a public record. Your future access to credit will be limited. A Chapter 7 bankruptcy will stay on your credit report for 10 years. Chapter 13 will stay on your report for 7 years. If you're granted credit, it will probably come with a high rate of interest. Consumer protections. Under the new law, creditors will be required to add minimum payment warnings on all billing statements for open-ended credit plans. The law also requires a disclosure for the credit extension secured by a home. The law provides for a reduction in a claim by a creditor if the creditor does not meet certain circumstances. Bankruptcy fraud. Bankruptcy fraud can land you in federal prison. Be prepared to tell the truth. Provide a complete list of all property and other assets you own. Give accurate estimates of what the property is worth. Make sure bankruptcy is the right option for you. Bankruptcy doesn't erase all of your debts. Are most of your debts non-dischargeable? Are you going to reaffirm most of what you owe? Do you owe small amounts that could be restructured or renegotiated? Consider all the options first. Try a repayment plan. If nothing else works, call an attorney who specializes in bankruptcy filing to learn what you need to know for your situation. Building and rebuilding your credit. Most commonly heard consumer complaint is, why won't anyone give me a chance? Most common complaint about consumers by potential lenders is, why don't people take care of their financial responsibilities so we don't have to turn them down when they apply for loans? Life without access to credit. Establishing and reestablishing a positive record can be accomplished, especially given sufficient time. There are a growing number of people who would like to live their lives without borrowing money. They want zero debt. How much money would you save and invest if you had no debts whatsoever? Credit is a convenience that few people would like to do without. Few people could afford to buy a car or a house without credit. Unexpected emergencies happen, and you may not have enough money on hand to handle them. Creating a positive credit history. When it comes to credit experience and history, there are 3 types of people: those with good credit records that have been established over time, those with no credit records, and those with bad credit histories. If you have had no credit history or bad credit history, there are at least 24 steps that you can take to improve your chances of getting a loan approved. Pay your bills on time. Pay all of your bills including rent, utilities, etc. Make sure that the checks go out promptly each month. Late payments can severely damage your chances for being granted loans in the future. Don't bounce checks. If you don't have money in the account to cover the checks, don't write them. Sign up for overdraft protection with your bank or credit union. Bad check fees can amount to $50 or more per paycheck. Think long term. It takes more than just a month or two to establish and build a solid credit history. It could take a couple of years of being on your own to have enough credit history to qualify for a loan. If you are rebuilding, it will take some time before the lenders will give you a second chance. During that time, your financial record must be clean. Start small. Apply for loans in small amounts. Lenders are more apt to approve a small loan. Visit local lenders first. A local bank, credit union, or finance company may be more willing to set up a small loan for you. Some will allow you to do a savings secured loan. Local credit departments may have a little bit more discretion and leeway with credit granting policies. Apply for a credit card. You have to deposit a certain amount of cash in savings account and pledge that amount as collateral against any balance you have. Apply for a small loan or low limit credit card guaranteed by the credit-worthy cosigner. Do this only if you're absolutely certain that the cosigner will not have to pay your debt for you. Get the cosigner loan paid off as soon as possible. Your cosigner will appreciate it, and an early payoff will look good for you. Creating a positive history. Review your credit report at least once a year and correct any inaccurate information it may contain. If a mistake shows up, it's easier to correct it the earlier it is caught. Review your credit report 2 to 3 months before applying for a loan. You can check for incorrect information. Avoid letting any accounts of yours be turned over to a collection agency. Information about collection activities will stay on your credit report for up to 7 years. Make arrangements with those you owe before they feel their only option is to turn to a collection agency to make you pay. If a creditor will not work with you, contact a credit counseling agency for help. Avoid having judgments filed against you in court. A judgment will stay on your credit report for 7 years. Recognize that bankruptcy is a last resort rather than an easy way out of financial problems. Chapter 7 will remain on your report for 10 years, Chapter 13 will stay on there for 7 years, and when it comes to access to credit, there is nothing as damaging as bankruptcy. Anytime you're denied credit, review your credit report to see what negative information is reported. If it's inaccurate, get the credit bureau to correct it. The denial may be because of too much debt, too little income, or too many inquiries into your finances. You might be able to do something to change your situation. It could be because you have too many open accounts. Close out those that you're not using. After 6 months of working on your credit history, apply for another small loan or credit card. Avoid switching employers. Lenders like stability in employment. Being with an employer for 5 years or more is a real plus when it comes to considering a loan application. Avoid moving from rental to rental. Set up savings as well as checking account. Have reputable credit references. Work hard to increase your income. Work hard to decrease your debt. Loans are based on income to debt ratios. Demonstrate that you live within your budget. Avoid co-signing or guaranteeing loans for others. Avoid excessive inquiries into your credit report. Too many inquiries can cause a lender to turn down an application. Don't give people permission to pull your credit report until you're actually ready to apply for a loan with that person. The process. Make sure that you fill out the application completely and accurately. Be on time for your appointment, dress appropriately, have account numbers, balances, and minimum payment information with you for all your bills you have. Be honest about your credit history, don't make excuses and complain about the terrible injustices you have suffered. Mention any job raises or bonuses that you'll get. Explain the purpose of the loan. Explain how you expect to repay the loan. Explain what you'll do if the loan is turned down. Talk about waiting until the credit improves, if you have to. Talk about saving more for a down payment, if needed. Talk about reducing debt, if needed. Ask for advice. Your loan approval will be based on your credit scores. If you'd like to see your current credit score, you can go to www.myfico.com. There's a charge for this service. You'll receive an explanation of how to improve your score. The score ranges between 300 and 900, and if you score above 700, you should have no trouble getting a loan. What your credit says about you. Identifying information. Credit information. Credit grantors are the ones who report all the information to the credit bureaus. Positive information remains on your credit report indefinitely. Most negative information is removed within 7 to 10 years. Public record information. Bankruptcies, tax liens, monetary judgments, overdue child support. Tax liens stay on your credit for 7 years from the date paid. Inquiries. This part of your report lists everyone who assessed your report from the past 2 years. There are 3 national credit reporting agencies or credit bureaus: TransUnion, Equifax, and Experian. You can request a free copy of your credit report from each of the 3 agencies by going on to www.annualcreditreport.com. Summary of Part 3. In this session, we learned about bankruptcy, chapters of bankruptcy, the bankruptcy process, how bankruptcy affects you, rebuilding your credit, and what your credit says about you. If you have any questions, comments, or experiences, or want to speak with one of our certified personal finance counselors, you can call us at 877-202-9246 or visit us at www.yourgfm.org.